Good morning, this is Graham Bibby here from instantstockresults.com. It's the 7th of June 2013, and what a week this has been on the stock market. You have to have nerves of steel as the market really broke below short-term stop losses and came to rest on long-term support level. What we have in front of us right now is the S&P 500, and if you go to the right of the chart where this circle is, we'll see a bottom just here, and that's where the market's support level should have been in the short term, but it fell down to this level, and that level used to be resistance here, and it became support here, and hey presto, the market has moved up 0.85%. If we have a quick look at the Nasdaq, you see that corrected in a similar fashion, and that's risen, but that trend isn't great at the moment. We believe in looking at stop losses on our positions. This is one of our stocks here, Con Electronic Stores, and it broke out of its sideways moving market last July, and the stock was trading around 17. It's 53.96 now after an 11% rise last night. This is what happens to your portfolio when you're in those leading stocks, and obviously that's where you want to be. Some of you may have seen a recent chart of Microsoft. It could have been bought down here in the 28 region, but the longer term support level was up here at 31, and we signaled a buy on this, and you could have bought it between 31 and 32. It's 34.96 now. It's just a month later, and that's somewhere in the region of 5 or 6% in 1 month. And why this was important, because I look at the big picture, and if you look at the big picture, and let's zoom all the way back to those fantastic days of pre-1999, since then it's largely gone sideways. It's actually gone everywhere but really nowhere, and it's again trying to break out of that resistance point, which is 31.49, and it looks to me as if it's in a longer term uptrend. And this is the sort of thing that can happen to you when you hit those longer term uptrends, because you can make some serious money if you're in the right area. So pre-1987, this stock was trading at somewhere like 5 cents. And 12 years later, it had reached almost $40. 5 cents to $40 is something like 10,000%. And it's going sideways ever since 2000. Anyway, back to our stocks. Overall, our stocks look great. Some of them are hitting new highs. Here's another one, another strong one. This is Spectrum Brands, Diversified Electronics. Here we are, is up 0.72, and the trend is still intact. So overall, there's a lot of deterioration happened in the stock market, but if you buy the strong, then you will continue to benefit. And I just wanted to show you here how I put on trend lines. It's quite simply, we see where the resistance was like this, we draw a line across, and then we'd wait for the attempt to break this out, which happened here. Then it was testing back, and then we really moved to new highs, and that would have been the point to signal a buy on Spectrum Electronics. The first one, that was $36 last August. It's $61 now, and this is all in the boring US stock market. It's boring, but it's good on research, and that's what we want. We need good, reliable research. We don't want to be looking at a market where we're doubting whether the figures we're looking at are good or not. It's not always perfect in the US, but that's a good point to start. And these companies are all looked at and analysed by the leading JP Morgans, the Goldman Sachses of this day. And you can just see here, this is an overall trend direction, and it's been very, very firmly up. So this is Graham Bibby from Instant Stock Results. Said please email me at graham@instantstockresults.com any questions you have, and if you need any help with your portfolio, and I hope to be able to welcome you to join our team in the near future. This is Graham Bibby on the 7th of June signing off. Thank you.